next up, we have Mike Butler, who is the CEO of Radius Bank, to talk about the bank's client-first approach in a time of uncertainty. Mike, let me bring you on.
There you go.
There you go. Thanks for joining us, Mike.
Oh, happy to be here.
Good to see you again. So can you first introduce yourself a bit before we jump into the interview?
Yeah, so Mike Butler, President and CEO of Radius Bank. I've been with Radius for about 10 or 11 years and been having a blast with it.
Can you tell us a little bit about your background before you got to Radius?
Yeah, I'm a pretty traditional banker. I've only worked for really two companies in my life, Key Corp and Radius Bank. So I'm unusual, especially with probably the guys that are listening today. It's a little bit more normal to jump around and take opportunities all over the place, but I was very blessed to have several different opportunities working for a large company like Key Corp that was growing with multiple different job responsibilities, and then the opportunity to take a look at Radius here and turn it into this organization that we have today.
That's amazing. And do you think that anything in your career had prepared you, or had you seen anything like this before, like this crisis?
Oh, I think some of the, well, surely you have to say to yourself, while this is unparalleled from the really negative impact on people, right? It's very painful for people, and people are dying, right? Let's not kid ourselves. I think surely the industry has been stressed before through a variety of different situations that have gone on throughout my career, and it's like we like to say that it's the companies that get through this are the ones that are built to survive. Your strengths show up during challenging times, your weaknesses show up during challenging times, and those that come out of it on the other end stronger and better are probably we're stronger and better companies. So we hope to be one of them.
That's a really good point. And so can you take us back to the early days of as we were starting to hear about COVID? How did Radius initially respond?
Yeah, I think I'm probably not different than a lot of the guys that you've talked to. It starts out as, gee, we seem to have a problem, and all of a sudden it goes to, now we've got this big kind of concern, and we've got to do something now to think about our business and our people. And we surely took it from our people first and wanted to be, everybody to be very safe. So, we've had a very kind of flexible kind of atmosphere in our office from the very beginning. We had much more of a work from home setup for most people to be able to do. So nothing like that was impactful for us, but we were pretty proactive and said, okay, we first said, it's okay if you come into the office for a week. And then the second week it was, guess what? You're not coming in the office. And then down the road, the government, and the state changed its rules a little bit, but, we wanted people to be safe. Let's was prepared to work from home. And, we had kind of done it for days at a time during bad weather, right? So we said to ourselves, okay, let's prepare for something like this. We didn't think it was going to be 6 or 8 months, or however long it's going to be. But we've done fairly well. But and we're able to serve our clients fairly well because of its virtual client base itself. So they were prepared for this. There wasn't a lot of change, and we were able to maintain our customer service levels at a pretty high level.
And what were you hearing from customers at that time?
Well, it wasn't anything unusual until we got into the PPP part of it, right? So most of our customers were pretty accustomed to not being able to walk in a branch and use the call center and use our device. So we didn't hear a lot about what was going on, especially on the consumer side. On the commercial side, you start to hear a lot of conversation is, how's everything at the bank? Are you going to be there for us? And, we kept reassuring people that we'd be able to transact business. But that's the, little smaller issue on the commercial side, not because of the size of our bank, but you're dealing with fewer clients. Whereas on the consumer side, you've got a mass market type approach with a lot of people. So, but it really was, we were a lot more business as usual than you would have expected, and felt pretty comfortable about it.
Did that continue throughout until now, or was there a certain trigger or a certain point where you realized like things have significantly changed?
Well, with the COVID, right? The world's changing. We're all concerned about what's going on in the world and people's health, and how we're going to operate in the future, and all of the impacts that could be out there socially, politically, and all those things. But it's funny when we're a pretty tight knit group of people inside the company, so we had opportunities to stay connected. We've always been concerned about people's work life balance. We were concerned about that as time went on. We actually did some things proactively to say you got to stop working. I think the thing that we found was working from home when you're engaged and busy can be way more work than the office, right? So you think that people would say, "Oh, you're home, you're distracted, your kids walk by, your dogs walk by." Well, we were finding ourselves on 8 straight 8-hour calls, right, all day long, going from one call to the other. And finally, after about a month of it, we all stopped and said, "Everybody has to tell me what day they're not going to work." And I mean, every single person in the company had to submit a form and said, "I'm not working this day." And it was because we needed people to get away from all the work. And we were also trying to restrict meetings and making sure people got outside and exercised. And we talked a lot about the exercise, mentally, physically part of it, to keep people, to keep that work life balance, make sure that there's more to it.
Were you finding that people were communicating that they were getting burnt out, or they were finding it very challenging to work from home during that time period?
Yeah,
Yeah.
well, yeah, I think there was, a couple things. We were actively engaged in the PPP process, which we might talk about later, which put an extra burden on the company from going through a difficult world event, and also have this kind of business opportunity on top of it. I think created more stress than we would have liked on people. And I think as we went through that, we started to hear that again we need a break or two. And then you've got some people that have other issues at their home that they're trying to deal with, right? So the thing that we were trying to say is this is impacting everybody emotionally, right? So it impacts you how you feel politically, socially. You got family issues, you got health issues, and it's like, guys, let's put it in perspective. Let's keep it in perspective. What I tried to tell everybody is keep your eye on the horizon. Don't worry about the choppy waters ahead. Do what we've always done. Work life balance. Keep your family number one, and things will work out. We'll get to the end game like we always do.
So I definitely do want to talk about the Paycheck Protection Program. Can you talk about PPP and how the company rallied around it?
Yeah. So first of all, I would tell you that we felt like, in times like this, as a financial services company, especially in an event like this, in which issues are impacting the world outside of what sometimes were self-imposed. When you think about some of the events that have gone on inside the economy, which hurt companies, some of them you'd point back and say, we were our own worst enemy. We did things, not everybody, but certain parts of the economy, or certain parts of the business sectors caused some problems. Well, this one was, kind of a crazy, nobody's at fault. And first of all, the company felt compelled to help, right? So here's the government saying, we need to get some money to small businesses. And we decided fairly quickly we wanted to be a participant just from how can we help. But then secondarily, we have a pretty big SBA business, and we have obviously a very big virtual platform. And we kind of drew it up quickly on a board and said, wait a second, we can combine these two things and really be able to make a big difference, and be a big participant for our size bank inside the PPP. And so we did that. So we used the gentleman who leads our SBA business to lead the project, and then we combined him with the guys in our technology shop, who were building the virtual platforms. We brought in our fintech partners like Treasury Prime, all willing to help. And within a week, we had a application stood up to be able to deal with the first round of applications, and we've subsequently gone through this. And I think we'll do $700 million in PPP loans by the time it's over. And for a bank that was $1.3 billion. That's a big number for us. But, I think we were, we kind of like a challenge, but we wanted to be a part of this. And we had the tools we thought to be able to really make a difference. And it was just really great. And I think it did help. At the end of the day, as much stress as it brought on, I think the team coming together, having a cause, rallying around an issue was actually something that was distracting to what was happening around us in the world. And I think it was one of these team efforts, team building efforts that actually came out of it for us, which was fun to watch as well.
So, Mike, you talk about sort of the different facets of putting that PPP program together. What about the human element? Like, how many people were involved in that? And you mentioned it was a stressful time. What made it so stressful? Were you guys pulling all-nighters? Were you have a war room? What did it look like?
Yeah, so it's interesting, right? So the first thing I would tell you is we're a technology company, so we don't look to human capital first, right? So we really didn't put that many additional bodies against it full time. So we basically said to our SBA team, over the next 2 months, you're going to work on PPP, and you're not going to do basic 7A 504 loans. So as a relationship manager, as an operating team, for 2 months, credit guys, you're going to do PPP. So that's a redirection of existing human capital away from day-to-day business into PPP, far more important in the moment. And then we took our kind of technology, marketing, call center guys and said, you're going to have to do more, right? You're just going to have to be able to do more. But we said from the beginning, it has to be technology driven, right? So that's what we've said 5 years ago when we put our digital platform in place. You got to do this with technology. We're lucky that we've got relationships with companies like Treasury Prime and others to be able to help us do this. And we're lucky that we've hired people that understand all this. But we kind of put a team together of about 6 or 7 people from technology, call center, risk, operations, marketing, if I didn't say that. And we said, okay, guys, we're going to get together. We're going to get together once a day, every morning. We're going to spend an hour. We're going to find out what's going on. We're going to figure out what our role, our roles are, and we're going to go execute. And lo and behold, the technology was up in place. The applications were being approved. We had a pretty good technology flow, in place. But I will tell you, we did reach out for additional human capital, and this is where this was fun too. So meanwhile, everybody's getting furloughed, right? And so what we said is, we basically said inside the company, hey, listen, we need about 10 or 12 people to work for us for about 2 to 3 months. Give me some great people that that have had a bad situation occur in which they're available and they want to work. And we had a list of 25 people, high performing people that just had a bad break elsewhere. And we were able to give them some work to do. And it was like this whole level of appreciation on the other side that people have been furloughed. And that's not we were paying them like a bunch of money. We weren't making them millionaires, but it was something better than sitting around, right? And so they were engaged. They were part of a team again, virtual, but part of a team again, and being able to make some money on the side. So, and it all came from our family. You know what I mean? All people that were a part of the group that, they knew somebody who was disenfranchised for, the unfortunate events.
So 700 million in PPP loans for a bank, a little over a billion, sounds very impressive. How does the team think about their accomplishments, or how do they put that into context? Yeah.
Yeah. Well, we kind of interesting. We just talked about this. We were able to reward some people with some, additional compensation, which is a pay for performance type thing. But what we really like to do is go out and celebrate, right? So that's what we're missing. I mean, we've held the happy hours, we've held the town halls, we've done everything that everybody's probably done, but it's different to hold a drink up with, on a video versus being outside, and so we miss that part of it. And I, at some point we'll get back there, but I think the team feels there's a sense of, first it was a sense of we helped, we played a role. Second, we did it. Third is there's a little bit of, hey, this technology platform is pretty good and it can be used in a bunch of different ways. And hey, we've learned some really skills about cross-functional team that have really been able to kind of play in a different world. So I think everybody felt really good about it.
Awesome. I want to switch gears to the consumer banking. Um, how did Radius? What were some of the things you did to address some of the pain points there on the consumer side?
Well, remember, we don't really have a consumer loan book, right? So most of our consumer lending is 1 to 4 family mortgages, and we have I would call a high net worth financing for yachts. But we were as sensitive as anybody could be throughout all of our lending areas. Very proactive and understanding of people's problems in the short term. Um, reached out to clients if they were concerned, responded very quickly, but we didn't have a lot of it, right? Like that's not the big volume that we had. And when you think about consumers for our bank, you got to think about depository accounts, right? You got to,
Yeah, those are
I
the
mean,
ones I'm
we're
referring to. Yeah.
yeah. Yeah. So I mean, the the only issue that popped up every once in a while was, if there was an overdraft related to a stimulus check, you know what I mean? There was some, the systems do some things that maybe weren't right. But other than that, again, it was a lot more business as usual, to be honest with you. And I think the one thing that we found is that because we had built a call center that was designed to really provide a little bit of a higher end service, is that the clients felt more and better about that call center. I mean, our NPS scores went up during this time frame. We were able to hold our average time to answer within our SLAs, which was great for us. Um, and I think it was one of these other moments that we said to ourselves, worth the time and energy we spent trying to upgrade that group of people for a time like this, which we knew no matter what, over time, this consumer wants more and more service levels, that they wanted it immediately. And so we were a step ahead, maybe a bit more prepared.
And do you
Now
think?
we've seen
Sorry, go
now,
ahead.
now, now we've seen a lot of activity coming from our consumers, right? So we're going to blow by all our numbers. I mean, and maybe that's for a later question, but I mean, we're gonna double the number of clients we planned to bring on board. We're going to triple the number of deposits. All of our services are being utilized at extremely high levels versus what we anticipated. So people are really actively engaged with the virtual banking side at this stage of the game.
Do you think you gained market share during this time period?
Oh, sure. Yeah. Yeah, I mean, again, I mean, I say that very confidently. I shouldn't say that, but yes, I believe that our institution, with our strategy of a virtual bank and the award-winning products and technology that we have in place, was a recipient of this event in which clients weren't able to use traditional places to bank and had to move to a digital network. And it's just natural that we were better prepared for that because of what we've been through. So we definitely gained market share. The PPP program and participation in that was a huge opportunity for us. Almost 0 to 100 as it relates to business and business accounts. So it was great.
So just sticking with the consumer depository business for a bit more, did this crisis impact, I guess, your any of the products and services either that were existing in market or that maybe you hastened to bring to market quicker? Was there any, I guess, response, or it was more business as usual?
I think what the guys would tell you is that we've been working on some engagement and personalization, right? So ways that we can kind of I guess feel like we're communicating individually to people about what their preferences are, right? So that's that personalization. So we did take the opportunity to accelerate some engagement tools out there related to some cashback rewards and some other benefits that would have rolled out later. I think the team accelerated those, well received by the group. I think it was just a bit opportunistic for us to say we've got the attention of a lot more people at this stage of it. Maybe it's a better time to roll it out.
Got it. Mike, I wanted to talk about Fintech Partnerships. I know that's part of the Radius strategy. What role did those play during this crisis, and maybe your ability to continue to grow and gain market share?
Yeah, really cool question, Zach. So a couple different fronts, right? So one is we have technology partners, fintech partners that help us with our platform, right? The guys that help us build this Amazon like experience, and that's where a company like Treasury Prime stepped in, and a company like Narmi, who was running our online and mobile banking platform, was able to help us with some issues around, the unfortunate side of this where there might be some fraud going on. And I would tell you that those partnerships and their responsiveness to us and their relationship to us was just priceless, right? So, and again, I'm not being critical of anybody or anything, but we chose to work with young companies that are responsive to us. And when you make a call to them on a Friday and say, I need an app stood up by next Friday, they're there for you, right? Now, so that's different when you are working in a larger environment, which during normal days provides you a whole bunch of great safety, kind of maybe efficiency, but man, we were blessed to have these guys working with us. And then on the other side, where we work with fintechs is where we partner with um, the the companies that we think we want to white label products for. So a couple of them operate in the business arena, right? So we chose, and again, back to the PPP, we did not do any kind of what I would call mass marketing on PPP. We only worked with our existing client base and then worked with strategic partners like Brex, like Toast, and others that had behind them a whole bunch of companies that were struggling to get a hold of their financial institution to operate with the PPP. But then they leveraged the centralized Toast and Brex organizations and came to us. So we were able to find a swath of kind of businesses that had a relationship like already built in with the companies, and I think it made for a much more efficient process. And I think it helped us with our relationship with companies like Toast and Brex and others out there that the names aren't coming to me, but it was a really great opportunity for us to prove that in this banking as a service environment, we can be more to fintech companies than just a deposit account. And so it was nice.
Mike, do you think that we've entered into a period of is this the new normal? And I guess the corollary to that is like, how are you thinking about evolving or growing the bank into that type of environment?
Well, I don't know what you mean by new normal because I want to stay away from social and political questions about what the new normal is. But if it relates to digital banking, then it is definitely, in our view, the new normal. And we've seen it through this period of time where people have less choices and people get very comfortable with, banking with their devices. So we absolutely think this is just one of those moments where you kind of like see a kind of a very quick uptick in a path that was going to be traveled anyway, which we like and we're prepared for. And when we think about growing the company, Zach, you got to remember we're about to be acquired by Lending Club. And
Yep.
when I told you I didn't have a consumer lending platform, well, we will in a couple of months. And I think the opportunity to take these two companies and grow them together is part of what's exciting about our future. Everybody else has a different path to go on, but for us, that path what's in front of us right now, and I think is really exciting for us.
So clearly there's a consumer lending product on the horizon. Are there other things you can point to at Radius in the product pipeline or marketing pipeline that we should keep our eye open for over the next few months?
Well, I think you're going to hear a lot more about our business checking account and how we're going to deal with small businesses and micro businesses. All right. So I don't think I'm the first one to say this, and surely I know I'm not. But I think as you've seen this evolution from the consumer to a digital platform, you're seeing that evolution in the business side, and it's most relevant and the demand is highest in the smaller business arena. And I think that will be the next underserved market that we got to attack. And we're prepared to do it on the deposit side, but I think you'll see more on the loan side come up there. A whole bunch of great companies on the fintech side, Brex being one of them, who are solving some of the problems associated with small businesses. So I think that would be probably our next most obvious push from a new product perspective.
Great. We have some questions from the audience. You up to taking some questions, Mike?
Sure. I mean, as long as you guys are up for hanging, it's been a long day. I know that by this hour, I can hear the ice cubes, in the background.
We're happy to be talking to you and learning. So let me bring up Brandy.
Hi.
Hi.
You heard my ice cubes, huh?
Can you introduce yourself first, Brandy?
Yeah. Hi, I'm Brandy DeWild. I'm with Cardtronics. I'm curious, you mentioned that you believe that you're going to double your new account holders, that's big. And I'm curious, what do you see as the driver for that?
Well, so again, you got to remember our size. So we're going to open about 1,200 new accounts on average a month, and that will double our plan, not double our number of clients. That'll double our plan for the year. So let me clarify that. So we'll open what's that? Something like 12,000. We'll add 12,000 new clients to our base. That's not doubling our base, but that's a pretty big number for us on an annual basis. I do think that what's driving the growth is the demand coming from the consumers as they just simply choose to do business outside of a traditional branch network. And when they choose to do that, they are often looking to change banks versus look at the similar offering that their bank may have. And I do believe that in certain cases, the offering that a traditional bank has is less optimal than what a digital or virtual bank can offer. So I think that's what's driving it. It's always been driving it. The numbers have been pretty clear. People want an Amazon-like experience for their banking, and they want to have it at their fingertips. We are late to the game as an industry to e-commerce and the e-commerce experience for consumers, I think.
So you're feeling like it's the experience that you offer that's driving that growth.
At the end of the day, I would tell you better put experience before product, because products are easily replicated, experiences aren't. And at the end of the day, if that client doesn't have a good experience, no product's going to keep them with you. So it's got to be a good experience. You got to have a great online and mobile platform. Your call center has to work great. Your technology has to work great. Products are good, but experiences top it all, I think.
Thanks.
Brandy, thanks for your question. And Mike, that'll wrap it up for today. I really want to appreciate you and thank you for joining us at the Tearsheet inaugural Resilience Conference. It was great talking to you about Radius.
Thanks, Zach. I appreciate it. I had fun.
Okay. Thanks, Mike. And with that, we'll call it a day. We'll be back bright and early tomorrow at 11 a.m. Eastern. We'll kick it off at 11. And tomorrow we've got another great group of speakers. We've got Ben Hoffman, who heads up FinTech and strategy at Fifth Third Bank. We've got Luke Voiles, who's at Intuit, who runs QuickBooks Capital. Patrick Sells, Chief Innovation Officer at Quantic Bank. We're going to have the first of our panels, which is a PR pros panel. We'll be speaking to 3 experienced PR experts to talk about the future of financial services and communicating during this tumultuous environment. So I definitely would ask you to come back, return tomorrow for some great discussion around resilience. And with that, Zach Miller, Editor-in-Chief at Tearsheet, signing off for this evening. Thank you guys for joining the first day of the Tearsheet Resilience Conference 2020.